This is the luxury world. Get inspired with us today and tomorrow. In the luxury watch market, few timepieces have commanded attention, status, and fervent demand, quite like the stainless steel Rolex. Over the past 5 years, this material category transcended traditional horological boundaries, emerging not merely as a utilitarian choice, but as a cultural phenomenon. Stainless steel Rolex models, particularly those from the professional sports lineup, became emblems of success and symbols of exclusivity. The scarcity at authorized dealers only fueled the narrative, as obtaining one at retail became an elusive dream for most. Secondary market values skyrocketed, often exceeding retail prices by tens of thousands. The stainless steel Rolex was no longer just a watch, it was an asset class in itself. In this video brought to you by the Luxury World, we will explore the latest data from the secondary market to understand how the perception and value of these once untouchable models is changing. From subtle adjustments to sharp corrections, the Rolex market is undergoing a transformation that signals the end of one era and the beginning of another. The spotlight is on facts, not hype. Trends, not opinions. This is the current state of stainless steel Rolex in 2025. Be sure to subscribe to Luxury World for exclusive access to upcoming insights, curated content, and expert guidance to help elevate every step of your watch investment journey. As of July 21, 2025, the index registered at 1,466.08, marking a modest 1.15% increase over the prior month. From June 23 to early July, the index showed a small rally, peaking just above 1,470 before tapering off slightly. While this uptick might appear promising on the surface, historical patterns suggest it is more likely a temporary reaction. Zooming out to a broader time horizon offers a clearer picture of the prevailing trend, a market in slow retreat. Indeed, analyzing the 3-month trajectory of the Rolex index paints a more sobering narrative. Despite short-lived rallies, the broader trend reflects a consistent downward slope. From late April through mid-August, prices have declined by approximately 2.71%. This is not a sharp crash. Rather, it is a deliberate, persistent exhale from a market that has been overheated for too long. The fever has broken. The secondary market's earlier exuberance has been replaced by cautious sentiment. Buyers are less impulsive. Sellers, more willing to negotiate. This market-wide rebalancing is even more apparent when examining individual Rolex references and their performance metrics. A breakdown of the 10 most influential Rolex models by trading volume offers insight into which models are stabilizing the brand's market presence and which are eroding it. At the top of this list sits the Datejust 41 reference 126334, which accounts for a staggering 12.76% of Rolex's total secondary market trading volume. Combined with the two-tone Datejust 41 reference 126300 and the classic Datejust 36, these three variants comprise nearly 26% of the total Rolex resale landscape. The data confirms what has long been suspected: timeless, versatile models still command consistent attention. In terms of performance, the Datejust series continues to impress. The two-tone 126333, for example, delivered the highest percentage gain over the last 30 days, rising by 6.89%. Similarly, the yellow dial Oyster Perpetual 41 gained 3.61%, and the Datejust 36 added a modest but meaningful 2.35%. These gains suggest that the market still values wearability and refined aesthetics, especially in models that eschew the hype-driven narrative that once surrounded Rolex's professional sports lineup. In essence, substance is being rewarded over flash. Conversely, not all models are weathering the correction equally. The Submariner 124060 experienced the steepest decline, shedding 5.4% of its value in the last month alone. It was closely followed by the GMT-Master II Pepsi reference 126710 BLRO, which dropped 5.01%. Even the Submariner date showed signs of weakening, declining 1.27%. These declines serve as a referendum on the overexposed icons of the previous cycle. Once untouchable grails, these models now face a recalibration that reflects changing collector sentiment. The market no longer tolerates inflated premiums driven by artificial scarcity or influencer clout. What is valued now is authenticity, balance, and intrinsic quality. Beyond price changes, another critical metric highlights the ongoing transformation: time on market. While price tells one half of the story, The duration it takes to move a watch through the secondary channel reveals the depth of demand, or lack thereof. And few models demonstrate this phenomenon as dramatically as the Submariner. Once considered the quintessential daily Rolex, the Submariner was virtually impossible to source at retail for years. By mid-2022, units were selling in just over 20 days on the secondary market, testament to its unmatched demand. Fast forward to mid-2025, and that average sales period has ballooned to nearly 80 days. Watches are sitting unsold in dealer inventories 4 times longer than they once did. Volume is down. Turnover is slow. And for the first time in recent memory, supply is outpacing demand. The Submariner's aura of scarcity is beginning to fade, replaced by a growing sense of buyer hesitation and inventory buildup. Yet even the Submariner's downturn pales in comparison to what has befallen the Daytona. Long regarded as the apex predator of the Rolex ecosystem, the Daytona had cultivated a near-mythical reputation. It was the poster child of unobtainium, so exclusive that it was often said to carry a multi-year waitlist at authorized dealers. The secondary market reflected this scarcity, with premiums reaching astronomical heights. But those days now appear to be behind. Recent sales data shows a steep decline in unit volume for the Daytona. From a high point of over 250 units in mid-2023, monthly sales have plunged to around 150 by mid-2025. But the most jarring detail lies in the day-on-market data. From a low of 25 days at the peak of demand, that figure surged to nearly 100. A timepiece once sold in a matter of weeks now languishes for over 3 months before finding a buyer. The perceived exclusivity that once empowered aggressive pricing tactics from gray market dealers has dissolved. Urgent messages from resellers no longer signal opportunity. They read more like clearance sales cloaked in feigned scarcity. This changing landscape also hints at a profound shift in the power dynamics of the market. For years, buyers were at the mercy of a system designed to frustrate and manipulate. Authorized dealers often conditioned access to high-demand models on the purchase of less desirable pieces, pushing clients to acquire gold datechists with garish dials or diamond-studded outliers just to earn a shot at acquiring a Submariner or Daytona. That model is now being challenged. The tables have begun to turn. Today, it is common for dealers to initiate contact, offering allocation opportunities that once required years of cultivation and thousands in ancillary purchases. This reversal is more than anecdotal. It signals a systemic shift in the mechanics of Rolex retail and resale. Watches that once chased buyers are now chasing exits. The luxury watch market is no longer a seller's playground, and stainless steel Rolexes are no longer sacred ground. Inventory is growing. Prices are softening. Enthusiasts who once felt alienated by inflated premiums and manipulative sales tactics are finding an opening, a rare moment when passion and prudence can align. The broader macroeconomic backdrop also plays a significant role in this evolution. The once favorable conditions that fueled the Rolex boom, stimulus-driven liquidity, booming crypto portfolios, and a speculative mindset, have largely evaporated. A more cautious global consumer has emerged. Purchases of $25,000 watches that once retailed for $15,000 are no longer viewed as clever arbitrage but as irrational indulgence. This shift in consumer psychology is reinforcing the market correction. The exuberance is gone, replaced by a more measured, value-conscious approach. In summary, the data reveals a luxury watch market that is undergoing necessary recalibration. Stainless steel Rolexes, once inflated beyond their horological worth, are finding a new baseline. The Submariner, GMT-Master II, and Daytona are no longer guaranteed investments or instant flips. They are once again luxury watches, mechanical objects of desire, not speculative assets. The transition may be uncomfortable for dealers and flippers, but for collectors and purists, it is a long-awaited shift. This market is not collapsing, it is healing. The hype is fading, but the heritage remains. What are your thoughts on the Rolex topic we shared in this video? We would love to hear your perspective. Feel free to share your thoughts in the comments and give the video a thumbs up if you found it insightful. Do not forget to follow Luxury World for more curated content on fine timepieces and market insights. Thank you for watching, and we look forward to welcoming you again in our next video.